All right, so we had another interesting week in the markets. The main piece of news from this past week was the Fed meeting. They did release a dot plot this time too, which they don't always do. I believe they do it about half the time. So again, I want to get into that. I want to get into some other stuff. First things first, if you get value out of the video, please like and subscribe. As always, check out the links below. So again, the Fed, obviously everybody knew going into that they weren't going to cut. We almost always know what's going to happen going into the meeting. The big news always is, what are they going to do going forward? And this meeting was kind of interesting because they don't really know. There's definitely some disagreement. There's a couple members that want to cut in, I think at least a couple, maybe more, that want to cut in July. And then you have other ones that don't want to cut. The dot plot, which again is very important because that basically is the Fed members guessing where they think rates are going to be, and the consensus is still 2 cuts, but again we don't know. And if there is 2 cuts, most likely that first cut will be in July, because I believe there's only 2 other meetings after that. So obviously, nobody knows. It looks like the Fed doesn't even know. But this is important because typically there is consensus within the Fed. And I think this is part of the reason why the stock market sold off this week. The S&P was down about 1.3%. The NASDAQ, I believe, was down about 1%. International actually sold off even more. I think that's mainly due to the rising tensions in the Middle East. I think that's part of the reason why the U.S. market sold off as well. And I still kind of stand by my prediction that I think that this is a terrible move by Trump if he continues to escalate this situation. Number one, because obviously it's bad for the markets, and number two, because it's just not popular, right? Even within his hardcore fan base, I don't even think going to war with Iran is popular, right? I mean, it's definitely not popular amongst Democrats, but I don't even think it's popular amongst Republicans. So that would be a terrible move. It would lower the Republicans' chances of winning in the midterms and the next presidential election. It doesn't really have any benefit other than it benefits Israel, which again, obviously the Israel lobby is quite powerful, let's be honest, but it doesn't really have a lot of benefit. You could argue the one argument that they make is, oh, well, we don't want Iran to have a nuclear weapon. It's so dangerous, but it's like, you got some crazy countries. Like, I mean, do you really think that Iran is crazier than North Korea? I don't see how you can reasonably make that argument. North Korea has nukes, so at least a nuke. So the idea that Iran's going to get a nuclear weapon and just immediately blast most likely Israel is just not. It obviously it's possible, but I think it's pretty insane to think that it's even like maybe anything more than like a 10% chance if I was putting odds on it. And again, that begs the question, is it worth getting a bunch of people killed, potentially causing, I think that, bombing Iran, there's this likelihood of starting a whether it's a world war, whether you want to call it World War III or not is irrelevant, because if America's involved in it, it's possible that Russia or China gets involved in it. And if that happens, well, yeah, it's World War III. So to me, it's just not worth it. Number one, because it doesn't benefit America or the West at all. And number two, it's going to be bad for markets, obviously. And number three, yeah, maybe you get what you want, but then maybe Iran views themselves as being backed into a corner, and they come back twice as hard. And then if you're America, you might already be committed. You have to come back twice as hard. Iran and Russia are alloys. Maybe Russia comes back. So it's just a terrible move, right? It's really just a terrible move. But again, getting back into the main point here, as far as the stock market goes going forward, again, the Fed cited uncertainty as to why they don't know if they're going to be cutting rates. Number one, you have the possibility of war, and war typically is inflationary because the governments have to spend money, and a lot of times it's with a slowing economy, right? Because if the government's diverting resources to war when they otherwise could be diverting resources to things that are actually productive, well, that hurts the economy. So there's many reasons to be against this. I think it's quite obvious, but it's bad for the stock market, obviously. It's going to cause inflation, number two, and number three, it could cause world war. So just a terrible idea in my mind, and eventually, it very well could be inflationary. So that's why I think the Fed is kind of treading cautiously here. I still think we're going to see rate cuts at some point this year, but it might only be one cut, right? It might only be one cut in November, December. That's honestly probably a 50-50 chance, maybe slightly less than 50-50. I think it's like a 60% chance we see two cuts. So yeah, that means it's almost a 50% chance we see only one cut. And what happens if the tariffs are really inflationary? Then we might not even see a cut at all. But again, if you're thinking about it from Trump and the Republicans' point of view, it almost guarantees that they lose the midterms, and if they lose the midterms, they're going to get nothing done in their second term if inflation's still a problem, if the economy's still a problem. So they are royally stupid if they don't have trade deals in place, I would say by the end of the summer, maybe even sooner. And this Iran-Israel situation is, at the very least, tensions have boiled over, or gotten better, I guess is a better way of putting it, not boiled over, gotten better. So again, we'll see how that goes, but I think that over the short term, I really don't see the stock market making a new all-time high, but I could very well see it at some point in the summer, most likely later in the year if I had to put money on it, because I think later in the year we probably have seen a cut. We probably, the tariff concerns are probably behind us. The Iran-Israel situation probably behind us. And I think we could see some smooth sailing then, but obviously nobody knows. That's just my prediction. The next thing here from Sam Callahan: people bang their heads against the wall when they realize all they had to do was buy Bitcoin, forget about it, hold it for 10 years. They think it was so easy, I could have done that. How was I so dumb? Ironically, that's all they still have to do today, but how many will? That's the big question. My answer to this question has always been not a lot, right? There's a lot of people that talk about Bitcoin like, oh, it's going to be a world reserve currency. Everybody's going to hold it. Every corporation's going to hold it. I don't believe that because, like I've said time and time again, all you really had to do to preserve your wealth over the last 50 years is buy real estate, buy gold, buy stocks. And yet how many people do that? Not even the majority, right? Not even the majority of people do that. So what makes you think that the majority of people will do that with Bitcoin? Now, again, they probably clap back and say, oh, well, Bitcoin's it's performed better and it will perform better. I believe that. But again, I think that Bitcoin could return 50% per year for the next decade. And I still would be absolutely shocked if the majority of people hold Bitcoin, especially directly. Maybe, indirectly through ETFs and retirement funds, stuff like that. But I still would be very surprised. And the reason for that is most people are economically illiterate, and number two, they just don't want to admit they're wrong, right? There's a lot of people that rather would be broke all their life than simply admit they're wrong and change the way they spend their money. And it'd be really nice if people could figure that out. But anyway, I think that you're absolutely insane to not hold some Bitcoin. I would never recommend, personally, again, just my personal point of view here. Obviously, I could be wrong. Do your own research. But I would probably recommend people start out at like 5-10%, right? 5-10%, and slowly titrate up if you are comfortable, right? That's just my point of view. And again, the best way of going about it typically is the dollar cost average. That way you reduce risk. Just my opinion there, though. The next thing here is from TFTC21, and there is 151 publicly traded firms that now hold Bitcoin, up 135% year to date. And again, this is one of the most untalked about, one of the most slept on things in the history of finance, right? I mean, go back to 2020, right? Just 5 years ago, there was only two, right? There's only two. In 5 years, we've gone from 2 to 151, right? That is going up, 75-fold in 5 years. Even if we grow at half that rate, that would imply that we're going to have probably 5,000 in 5 years. That might be a little bit aggressive. I would probably set the over/under at maybe 1,000 if I was setting an over/under. But again, that's still a crazy amount. And one of the things that people are going to figure out eventually is that a lot of people think that some of these companies certainly are taking on more risk than they should. But when you look at the MSTR, Strategy, Semler Scientific, Meta Planets, 21 Capital, obviously there's some that I'm missing, but they're not taking on as much risk as people think. They're really not. And the main reason for that is eventually, slowly but surely, people will figure out that Bitcoin is the best collateral on the planet. And when people figure that out, they're going to be like, hey, there's a lot of these companies that seemingly have a lot of it, right? I mean, MicroStrategy or Strategy, eventually people are going to look at them and people are going to think of them as like they own the equivalent to like all of New York real estate. That's how people are going to think about it. And again, it's worth probably trillions or even tens of trillions of dollars. Like I've said before, and I'll say it again, I think Strategy will be maybe the highest market cap company in the world. Might be a stretch, but I think they'll be a top 10 company in the world one day. And I think we're probably 10, 20 years away from that. Like it's not that far away. So just my 2 cents there. But I think that this is a trend that will continue. And I think we're just getting started. Right? We're really just getting started. Speaking of Semler Scientific, Semler appoints Joe Burnett as director of Bitcoin strategy, but the main thing here, announces a 3-year plan to own 105,000 Bitcoin by the end of 2027. So fired up to have Joe on board and help us with this exciting new chapter. So Semler Scientific was up like 20% or something this week, and their MNAV was like 0.8 or something like that going into the week. Now I believe they're back up above 1. I still think that when you look at the MNAVs of these Bitcoin treasury companies, anytime, it's the good ones at least, not the bad ones, but the good ones. Anytime you get them below 1, I think that is an absolute steal, because when you look at Bitcoin ETFs, they're always going to trade pretty much at that 1 MNAV, right? For every, the value of their Bitcoin is going to be how much they're worth. Obviously, you take the shares divided by, or the market cap divided by the shares, and then you'll get the value, right? Pretty simple, or the amount of Bitcoin, total amount of Bitcoin divided by the shares, right? That's pretty straightforward. But when it comes to these companies, it's different because they can use leverage, they can borrow money in several different ways. So, and not to mention too, there's other things they can do. They can become a Bitcoin bank. Like there's numerous things that they can do, which means that they should be trading at more than a 1 MNAV. They should probably trading 1.5, maybe even 2. You could even argue higher, but I think 1.5 to 2 is probably that sweet spot. And Semler is still below that. I still think they're undervalued. I think Strategy is quite undervalued here as well. Obviously, just my opinion. But I think that, honestly, Semler, in my opinion, is probably the second best out there right now. Obviously, Strategy is by far the number one. That's not even close. Number 2, I think that the only ones in consideration probably is Semler, it's Meta Planet, and it's Cantor Fitzgerald or 21 Capital. I think it's Semler, mainly because number 1, they're going to have 105,000 Bitcoins by the end of 2027, and number 2, their actual traditional business is actually a decent business. Like of all the Bitcoin treasury companies, I think Semler's traditional business is probably the best. So obviously they're going to be focusing on Bitcoin more, but I think that they're very good. And the last thing to bring up here is, according to Bitcoin News 21 on Twitter, Bitcoin 4.7% world allocation, the same as the internet in 1999. And if I'm being honest, I don't think that, let's just round it up here, 5% of people, I don't think 5% of people own Bitcoin. Like in my goings about, it's maybe 1%. Now, I don't know how they go about determining this, because if they include indirect exposure, yeah, I definitely could see it. But people that actually hold their own private keys, that's probably like 1 out of every 1,000 people. So we're talking like 0.1%. But even if you include like people that own, like if you want to be really, really loose with it and include people that own Bitcoin ETFs, include people that own Bitcoin on exchanges, I still don't even know if it's 5%. So I really would like to know how they got this number. But the most important thing here is not that. The most important thing here is that how many people were using the internet in 1999? Like, not a whole lot, right? Not a whole lot. It wasn't until like the I don't really remember it, but vaguely remember it. I was just going into grade school in, I guess, 2004, 2005 would be my first year. No, 2003, 2004. But anyways, like, even like when I first went into school, that was like just when they were getting computers, right? So that's just as the average person was adopting the internet. So we're talking like, 2003-ish, right? So that was 3-4 years before that. And yet that was just when like your average school was getting computers. So the vast majority of people, like probably 99% of people didn't even have a computer then. So I think that we are still not even close to seeing peak adoption when it comes to Bitcoin. I've said time and time again that a lot of people say, hey, at what point will you know that we will see diminishing returns with Bitcoin? And diminishing returns with Bitcoin will still be better than most assets, but when it's a normal thing, like financial advisors, when pension funds, hedge funds, even your average Joe, when it's something that people, like when people invest a certain percentage of money in Bitcoin without even thinking about it, when financial advisors recommend it without even thinking about it, when the majority of corporations hold Bitcoin on their balance sheet without even thinking about it, that's when we'll know that we've seen diminishing returns. That's when we'll know. But until then, I don't think we've seen it. So anyway, that's what I wanted to bring up today. If you liked the video, please like, subscribe, check out those links below as always, and stay tuned for more.